Sometimes I get asked the question and people expect me to give some kind of universal answer, but that's really hard. Yeah, it's really hard to give you an answer to any question because life isn't black and white and neither is trading. And for a lot of things, the truth is no. For a lot of things, there is a clear answer, and for a lot of things, there isn't. And honestly, I have no clear idea whatsoever what precise stage of trading you're currently at or exactly how you meticulously execute your trades. I know you personally, but I am not looking over your shoulder at every single moment. So sometimes it becomes incredibly difficult to provide a truly comprehensive answer. So I just got an interesting question from a trader I follow. Even though we're not really in touch, I follow him and he follows me. And the question was whether to intervene in trades if there's a clear pattern forming. That means, for example, you have a set entry and during the trade, a clear pattern forms. So the question is whether to intervene or not. And this is exactly where we get to the point that there isn't a universal answer to this. Or rather, the way I see it, if you're just starting out in trading, then under no circumstances should you intervene. You just set it up, forget about it, try to put the trade out of your mind, and wait to see the result. If you're in some kind of intermediate phase, I still wouldn't intervene. I would just let it play out. Because just like in backtesting, we try to behave the same way as we do when trading during a backtest. I see the situation, I mark my entry, exit, stop loss, take profit, and however the trade turns out, I record it in the statistics. And that's exactly how I would want to behave. So even in this intermediate stage of trading, when you're somewhat experienced, I would say it's better not to interfere because you'll end up ruining your karma by meddling with trades, developing bad habits and things like that. I think that's what the intermediate stage is about. And for those traders who have been at it for 5 years or more and have a lot of trading experience, of course, that's something to think about. There's no universal answer to that. It really depends on the specifics. But if something specific forms on the chart, like a double top, a neckline retest, and I have the opportunity, I can see it, the setup is clear and it's obvious which way it should govern. It's a matter of consideration. Whether I close this particular trade at the time when, let's say, the retest is happening and I expect that at the retest it will bounce back against me. So that's the question. But the answer is individual, you know. It's not something you can generalize. Like, it's not as simple as saying whenever you see a counter pattern, just close it. It doesn't work like that. And now, on the other hand, if I look at trading in general, how many times a year does it actually happen that I find myself in such a situation and, in quotes, save my capital? It happens to me once or twice. And now, if I'm going to mess up my karma and keep looking for those boogeymen and constantly searching for some kind of opportunities, oh God, something might go against me here, or just looking for those things. And once you start looking for them, you usually just start finding those things. So if I'm basically ruining my trading, that pure clean style, just by saving like 2 stop losses a year, I'm not saying that 2 stop losses a year isn't a lot of money, right? If you've already reached the level where you're trading, say, 10 million and up, then it's a lot of money. But again, not compared to how much you can make from it. So I just recommend not interfering, you know? For your development and long-term focus, I think it's just way better. It's better to just say, I won't interfere, rather than looking for opportunities to step in. So that's just my own observation, something I wanted to share here.